Crypto Hotep here with another investing video. We're on week 65 of the Family Portfolio and Dividends Tracker. If you're unfamiliar with these videos, feel free to go to the channel, go to week number 1, and that's where I laid out my whole methodology, the reason behind these videos, and why I'm doing them. Basically, it's to track the investment journey with me and my family. And the process was I shortlisted several stocks and companies that my family were familiar with. I then gave them the list of stocks to choose from, and then we proceeded to use M1 Finance as our broker of choice. You're about to see with M1 Finance, you're able to create a big portfolio and then have sub-portfolios in it. And then every week we look at this portfolio, we look at the gains, the losses, dividend activity, the balances, the news that affects the markets, and overall, again, just tracking that investment journey. These videos are for my own edification first and foremost, and hopefully my family will find them and they're helpful for them when I'm gone as well. If you find them helpful, feel free to like, subscribe, comment, but by no means is this financial advice. So before we jump in to week 65, we go back to week 64. So week 64 saw us with a balance of over $2,400. Another milestone met, right? So we had a balance of $24.04 which equated to a year-to-date weighted rate of return of 0.62% in the positive, with $13.50 dividends earned. So this week, where are we at? So this week we did take a slight downturn. There's a couple reasons for that, mostly to do with the Middle Eastern conflicts. But for this week, we went down below 2,400 at $23.92.57, which equated to a money-weighted rate of return of a negative 0.79%. Dividends earned peaked up, though, at $13.82 now. So let's see what's been going on between last week and this week. So we have a whole slew of dividend activity here that we can jump right into. So from this week and last week, we have dividend activity with O Realty, CTAS, Pfizer, Hershey's, McDonald's, Duke Energy, and Google, as well as Waste Management. So all of these companies paid us a dividend for holding the respective shares of those companies. Now, if you're looking at this, and if this is your first time watching the video and you're saying Crypto Hotep, these are just pennies. Are you serious? You are correct. They're just pennies, but at the same time, we're building up our account. This is a rather small account when you're dealing with dividend investing, and those small accounts are kind of like the snowball, right? You start the snowball off small and you keep building on as you go, and as you keep building, the snowball gets bigger and bigger. So right now we're still in that small phase, and it takes time for those dividends and those holdings to grow. So I'm just worried about consistently getting these dividends and then building upon it. Just consider like dividend investing a marathon race versus a sprint. So we'd also had several buys here. Okay, so we had several buys here today. We bought some Berkshire Hathaway, we bought some Costco, Sony, Pepsi, and McDonald's. And we had these stock buys from this deposit here. This is our regular deposit that we typically put in the account every 2 weeks, unless we get somewhat of a bonus payment or anything like that. So this is from this. We just had several dividend payments that were lingering. That's why it's a little bit more than the $15. So if we go to each portfolio here, let's go bottom to top. At the bottom in terms of balance is my wife, but she has the biggest year-to-date money weighted rate of return out of anybody here. So my wife's balance sits at a $258.06 balance, money weighted rate of return of a positive 10.76% year-to-date, market gain of $18.19, and dividends earned of $1.30. So again, if you've been following the video, you know that Celsius Holdings was a major point in this, and this is still the case. My wife's holdings for Celsius is up over 72% year to date. Pepsi is down over 13%. Tesla is down over 4.5%, and then Google almost down 10% with Google. My thoughts on this currently, Celsius is having a run. Again, I don't think they're done with the run yet. Pepsi, Tesla, Google, some of their kind of longer, well-standing companies, they're having a hard time right now, and it's just a little bit choppy out there. Nothing I would make a hasty decision on, though. Let's look at our middle stock. Our middle stock's balance is $268.18 with a dividends earned of $1.47, a negative 3.31% money weighted rate of return with a negative $8.82 market gain. So Amazon currently down over 2.5%, but Target, as we mentioned before, down over 25% on Target. We were down almost 30% on Target, so slowly but surely we're creeping back in. Target's having a bad year as of right now. Does it make me want to trim my position in Target? Not so much. I'm going to wait to see how the year plays out for Target, especially with the holiday seasons and such. So no hasty moves with Target or for this dividend aristocrat right here. Costco still up over 6.5% with Costco. Starbucks up over 1% with Starbucks. Tesla down over 11.5%. Sony up over 11%, and then Google up over 13% with Google. Let's go to our youngest. Our youngest has a balance of 311.97, okay, with a money weighted rate of return of a positive 1.8%, dividends earned of 87 cents, and a market gain of a positive $3.69. So very similarly before with our middle, Tesla still bleeding out here, almost 11% down. Apple down over 16.5%, but very good showings between Starbucks, Costco, and Sony. They're holding up the weight of this portfolio. And this shows like it just pays to also invest and diversify your holdings out. It's very dangerous holding everything in one stock and having everything ride on that one company. It's, you don't have to spread yourself too thin, but it's very good to diversify across several different industries, right? Several different companies, I feel. Don't diversify too much, but I think diversifying a little helps out, cushion the blow, especially when we have choppy markets and down markets as we've had this year. Let's go to our oldest. Our oldest has a balance of $7.54.50, market gain of a negative 8.47%, dividends earned of $2.90 with a market gain of a negative $64.90. Very similarly to our youngest, they both hold Apple. Apple's down over 18.25% here, but Costco's up almost 6%. Tesla again following suit, down over 15%, but McDonald's down less than a percentage right here. Okay. And then last but not least, let's look at my stocks here. So my stocks currently, we are sitting at a balance of $799.86, a market gain of a positive 4.28%, with a money weighted rate of return year to date of 4.28%, which equates to a market gain of positive $21.77 and dividends earned of $7.28. So between this week and last week, nothing has primarily changed. Technology is still up over 5.5% here, which looks good. Apple, though, is down. So again, very similarly from the portfolios we saw, Apple is down in my portfolio as well. Google is down in my portfolio as well. But Coinbase had a nice run this week. Nvidia having a nice run. Microsoft, again, having a nice run as well. And then Meta, and then AMD. AMD is really showing off right now. Let's see what else we have here. Industrials and energy still still just trucking along here. Industrials and energy, almost all of my holdings are in the green. UNP, Union Pacific, almost in the green, down less than 1%, but CTAS up over 20%, Deere & Company up over 20%, Duke Energy, ExxonMobil, and Chevron. These three I said to watch out for earlier in the year, and they are showing and they are being very fruitful right now. Waste management up over 15%. Trash is king. Okay. And let's see what we have here. Consumer staples. Let's go into consumer staples here. So consumer staples has holdings like Target. We talked about Target down over 24, almost 25% in Target here, but we just spoke about that. Procter and Gamble down over 4.25% here. Lowe's down almost 13% here in Lowe's. Walmart up. Okay. Church and Dwight down, and then Kroger, which had very, very good earnings, up over 18, almost 19%. Let's jump into Kroger really quickly. If I feel as though Kroger is a very underrated stock. I feel if you go to the 5-year here with Kroger, you see it's up and to the right almost forever here. Kroger, my take on Kroger is if you think Costco is too expensive, buy yourself some Kroger. Kroger's at a decent price right now, at 71, almost $72 per share, and it remnants a lot of Costco. It is in the grocery store shopping market type of industry, so it plays off of that. But all in all, has great financials. So that's my plug for Kroger. McCormick Spice Company down over 3.5%. Colgate down over 3%. Kimberly-Clark, the additional holding that I added about maybe a month or two ago, down over 4%. And then Kraft Heinz taking a beating, down over 13.5%. But TJ Maxx showing up over 3% with TJ Maxx. So consumers and staples really taking a beating right now, which makes sense. A lot of uncertainty in the economy. People potentially aren't spending as much here, so this makes sense. Restaurants and food surprisingly up over 6%, and then real estate almost positive here. And what is that driving? Public storage down over 1%. Federal Realty is not catching a break here, down over 12%. I'm going to do a video and I'll look into this and see what's going on here. But O Realty and then VICI Properties up considerably here. Okay. And then our growth stocks just doing what they do here, up over 26% in our growth stocks. So we have Palantir, Tesla, CrowdStrike, and MicroStrategy. These are just small positions, as you can see the value here. But, these are some of those positions where you kind of wish that you had more because the gains are just amazing. Palantir up over 80, almost 82% on Palantir. But, as we said before, it's more of a conservative type of portfolio with only 5% being in those kind of growth, high risk plays. But all in all, still very happy with my portfolio. I wouldn't change a thing here, but I will be looking at Federal Realty, ticker symbol FRT, just to see what's going on there. So to end week 65, the family portfolio is at a balance of $23.92 and 57 cents. It dipped down a little bit, even with the deposit for this week because of those macro conditions over in the Middle East, more than likely, and just that uncertainty there. So money weighted rate of return of a negative 0.79%, dividends earned of $13.82, and a market gain of negative $30.07. If this video was helpful for you, feel free to like, subscribe, comment. Let me know what you think. If you like tracking the investment journey with my family, like, subscribe, comment. Let me know what you think. It all helps the channel greatly. And as always, guys, thank you and happy investing.